Hey guys, Rick Stein here, RLS Properties. Do another video session to answer some questions for you. It'll be on my YouTube channel, RLS Properties. I'm here with my friend Mark, and he has some questions about getting started and using the self-directed IRA to invest in real estate, either to buy property or to invest as a lender. So Mark, what do you want to ask me?
I got a million questions, Rick.
Go ahead.
So, if I have money, like right now I have money in a traditional IRA,
Right.
I want to put it in a self-directed IRA,
Right.
so I can control it,
That's
and
right.
then give it to someone like yourself or someone that can put that money to good use,
Right.
private lending.
Mm-hmm.
I have some rental properties, but I thought I'd like to get into some lending rather than let that money sit in the stock market.
Of course.
Where do I start?
Well, what you do is you can go online. There are a number of self-directed IRAs out there. What a self-directed IRA is, they are a custodian for the money. So you would have to roll over your money from your current IRA into the self-directed IRA. I would check about tax laws. If you're not 59 and a half, they might consider it a distribution, and you would have to pay, I think, a 10% tax on it. So you wait. You may have to wait. But in any event, once it's there, it's very easy. Then it's your money, and as by definition, self-directed it.
601, Lana, 601.
You'll cut that out. By definition, it's self-directed. So unlike the stock market where you have no control. Stock market goes up, stock market goes down. There's a hiccup in China, we're in trouble, oil, I have no control over it. With the IRA, you have total control over it. And you can invest in many things, including real estate in your IRA. And the best part is that once you invest, if you are a landlord and you own the property, well, then you're getting them. You know what your income is because you know what your rent is. If you are a lender, well, then you're the bank. So you're still getting a check every month because it's a mortgage and it's a lien on the property. So you're protected. The only thing you should be aware of is that when you invest if you're investing with your IRA and you are a lender, so then, therefore, you have a promissory note and a mortgage, it must be what's called a non-recourse loan, which means that in the unlikely event of foreclosure, you can take back the property, but you can't attach their other assets.
What happens if I take back the property? The property is still owned in my IRA.
No, it's not.
Or then
I own the property, you lent me money. Oh, it depends. So are you talking about you bought a property in your IRA?
no. So if I lent you money,
Okay, so I'm the buyer.
and then there's a default, you're not paying for whatever reason.
Right, okay.
So the mortgage or the
So you
the
foreclose
loan-
on me.
So when I foreclose on you, it's the IRA that's foreclosing on you, because I'm
Right,
really
that's right. The IRA is
foreclosing on you, and they can't go after you. They can go after the property. They get the property, so now the property is owned in my
Right.
IRA.
Yeah.
And then after that, I could do whatever I want with the property.
Well, if you sell it, then it becomes, unless your money, if you sell it and the money goes back into your IRA, that's fine. If you take it out, well, then it's a taxable event, right?
Okay. But the property goes into my IRA, and then I can do whatever I want with it. Like you said, I can
Right.
sell it in the event of a foreclosure, which I understand you've never had a foreclosure.
Thank God, no.
Thank God,
The
no.
one thing you want to do is when you have private lenders or owner financing, you pay them first before you eat, before anything else, because if you screw them, you're done.
Right. So how do I get involved in being the private lender?
Well, you could find an investor such as myself.
That's interesting. You're a private lender.
I'm an investor, right?
Investor.
And investors are always looking for financing.
Okay.
And I would much prefer to have private money or owner financing as opposed to a bank. Because a bank, I have all the documentation, and not that I'm afraid of it, it's just very time consuming. So you could agree to lend me the money. I have my attorney draw up the note, the promissory note and the mortgage, which is recorded It's like any other note and mortgage.
And then I'm assuming I would have my attorney look at that
Naturally.
also and say, okay, everything looks good. He draws up the note and it's just a matter of you get the money and get me a return on it.
It's that simple. And what I do is I set up an automatic payment from the account for that property, so I don't have to think about it. And you
And
get,
I don't have to think about
and
it.
on that date that the note is due, you're getting a check in the mail.
And so through my IRA, that check goes right
Into the IRA. It
into
does
the
not go to you.
IRA.
It goes into the IRA.
And the IRA holds it. And then once I have money in the IRA, I can then turn around and lend it back to you. Because, for instance, if it was a flip property, I'm going to lend you money for a certain amount of time.
Right.
And then once you flip that property, you're going to pay the full balance back to my
Right.
IRA.
Right?
Plus, in the interim, I'm assuming you're paying interest-only payments
Yes.
to the IRA. So I'm getting interest-only payments. Then I get the full capital back.
Right.
Now I have, say I invested $50,000. So now I have my $50,000 back
Plus the interest.
the interest.
Right.
I could then give it back to you and say, hey, Rick,
I would not stop you, Mark.
and you would not stop me, I'm sure. And let's make some more money off of this.
You're making money, I'm making money,
Everybody's happy.
everyone's happy.
I like it when everybody's happy.
Right?
That's a win-win,
I'm putting contractors to work, they're happy.
and they're happy.
Right? And maybe I'm rehabbing a property, the neighbors are happy because I'm beautifying the street.
And so what kind of return can I get on a private,
It really depends. Okay? And it
depending on the
depends.
property?
Well, it depends on my purpose for buying the property. If I'm buying a property for a flip, it's short term, I could pay a little bit higher interest because it's short term.
Right.
Obviously, I don't want a 10% note on a long term.
Right.
No, that doesn't make any sense to me. So, but for instance, I have notes out there at 5-6%, and it's better than the money market account.
For long term?
Well, 3 years.
Okay,
Okay, it's 3 years.
right.
But that gives me plenty of time to rehab the property, stabilize it, and refinance it. I'm refinancing one of my properties now where I should be closing any day on the loan where I had a 2-year note, which is kind of short, but it was a 2-year note. Now
So
we're
a
financing.
2-year note through a private lender?
Owner.
Oh, for the owner, okay. And then you'll refinance it with the bank
Yep,
after that. And then
he gets paid back.
the owner gets paid back, and then again, everybody's happy. Now you got bank financing as opposed to the private lending. But so if I if I lend privately to you,
Yes.
you give whatever, depending whether it's a long-term buy and
Yeah.
hold or a short-term flip,
It's not done on a case-by-case basis.
could be anywhere from 5% to 8%.
Could be anything.
Could be anything.
Anything we
depending-
agree on as long as the numbers make sense.
Okay. So
Right?
as long as
Neither of
you're
us are
happy-
in there to lose money.
Right. As long as you're happy and I'm happy or whoever.
Then the whole world spins, right?
Then the whole world spins, and we gotta love it when the whole world spins.
That's right. So if anyone has any questions about investing privately, investing any of your own money, I'm happy to answer your questions, whether it's an IRA or just money you have in a CD or a money market account. You could always contact me at my email address, which is on the screen, or you call me, 609-213-7250. Great, thank you.